Two contracts linked to StablR, a European stablecoin issuer, may have been drained in a live exploit worth about $10 million. On-chain analyst ZachXBT identified the incident and shared the alert on Telegram. The attacker appears to have used the cross-chain transfer protocol, CCTP, on the Noble blockchain to fund their wallet. The main address associated with the exploit is ZCDBA-DCF. ZachXBT also listed 7 additional addresses tied to the same event. ZachXBT noted that EURR and USDR, the two stablecoins issued by StablR, both fell more than 20% below their pegs. This is a significant development for traders, as stablecoins are expected to maintain a 1-1 value against their reference currency. The EURR and USDR depeg raises questions about the stability and security of StablR's reserves. ZachXBT also reported that he managed to freeze 6 figures worth of funds during the exploit, but the attack appeared to continue for several hours. He described the StablR team as unresponsive during the incident, which could indicate a lack of preparedness or transparency. The depeg of EURR and USDR is not just a technical issue, it signals a loss of market. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Confidence. No matter how a stablecoin markets itself with collateral, licenses, reserves, or technology, it is the breakdown of the peg that makes users and traders reconsider their positions. USDR is an ERC20 token on the Ethereum blockchain, which means it is used in wallets, on exchanges, and in DeFi protocols. StablR claims that USDR is issued one against assets like cash and government securities. However, the current depeg suggests a possible mismatch between the stablecoin's value and its underlying reserves. The use of CCTP and Noble blockchain in the exploit indicates that cross-chain vulnerabilities may be a growing concern in the stablecoin space. CCTP is a protocol that allows tokens to move between blockchains seamlessly, and if a contract is compromised, attackers can exploit these bridges to drain funds. The fact that ZachXBT was able to identify and partially freeze the attacker's funds shows the importance of on-chain monitoring and community vigilance. The broader market is watching how StablR responds to this incident. Will they provide a detailed report on the exploit? Will they take steps to stabilize the peg? Will they address the security of their contracts? These are the key questions that traders are asking. The EURR and USDR depeg is not just a technical anomaly, it is a signal of risk in the stablecoin sector. Stablecoins are meant to be a safe haven in a volatile market, but when they fail to maintain their peg, the entire ecosystem is at risk. The next signal to watch is whether StablR can regain control of the situation and restore the pegs of EURR and USDR. If the depeg persists, it could lead to further market uncertainty and a broader reevaluation of. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Stablecoin trustworthiness. Investors should monitor the price movements of EURR and USDR, as well as any official statements from StablR. The addresses involved in the exploit are also worth tracking to see if any additional funds are moved or if the attacker takes further action. The StablR exploit is a reminder that even stablecoins, which are supposed to be the most reliable assets in crypto, are not immune to risks. The market is watching closely to see how this incident unfolds and what it could mean for the future of stablecoin design and security.